My name is Britta Roden. I work at Swiss Life Asset Managers in Germany. I cover real estate and infrastructure as a researcher. I've been doing this for roughly the last 20 years, and at Swiss Life Asset Managers, we've been investing in real assets for over 160 years. So with 300 billion assets under management across Europe, and roughly, I think, 16 billion in infrastructure and 150 billion in real estate. This is the background that we can draw on. The similarities between real estate and infrastructure is that they're both inflation hedges. So both investments protect you against inflation in times of higher consumer prices. But there are some quite distinct similarities. For example, real estate is always market driven. You always see market cycles going up and down. And infrastructure is opportunity driven. So you have a much more steady cash flow, but you need to really assess the opportunity in order to see whether it's worthwhile to invest. So that's more of a private equity approach, and on the real estate side, it's more a market-driven approach. There are sectors where real estate and infrastructure converge, and those are the sectors, for example, social infrastructure. Clinics, hospitals, but also nursing homes, schools, kindergartens, which fall into both categories. Essentially, it's still real estate, but it's an operational type of real estate that serves a public purpose. And so in this case, those assets fall into both buckets. And then, of course, you have somewhere there's somewhat of a gray zone where you have, for example, data centers that are still plots of land with a building on top, but what really matters is what's happening inside the building and the infrastructure component. So that is where at some point powered land would still be considered real estate, but the actual data center, once it's operational, is infrastructure. Many investors are becoming more interested in infrastructure and those assets that offer both real estate and infrastructure in combination, just because the achievable yield is much higher. But those assets are way more complex because you need real estate expertise and infrastructure asset management expertise. And one example would be that we have an office development in Frankfurt where we are building a new office park with 6,000 new office jobs. And the office park is going to have data centers that target to the office occupiers, and the heat from the data centers is heating the office buildings. So this is where it's really merging, where you have infrastructure and real estate converging. But of course, those assets are complex. And you need more asset management skills and more expertise than just someone managing an office building. The German government announced a 500 billion euro infrastructure package that would be spread across 12 years. So this was intended as a boost to finance infrastructure investments, but it was spread across so many different sectors, from railroad tracks to roads to hospitals, schools, and defense, that the amount of sectors this money is targeting really is not enough to cover all the need that we have for infrastructure. So investors are currently hoping that this is intended as an initial financing and that private investors will be invited to participate and actually provide funds to invest in infrastructure. But for so many years, the government has not invested in infrastructure that there's really a very long backlog and you have to see that those 500 billion are nearly enough to cover what should have been invested in the past. Well, if institutions start to invest and start to partner up in joint ventures, say with the government, with other investors, I think there is a real need for private money to filter into the infrastructure sector. And one example, for example, would be grid infrastructure. We need to ramp up our electricity grids just because electrification requires us all to use a lot more electricity than we already do in the future. And so investors will have to go into grids and invest funds into growing these grids for the future. So this would be a really interesting way of participating in public projects that serve the greater good, but also have very attractive yields to investors.